Good afternoon. Happy to be here. This is Erik Tak. I'm the head of the ING Payment Center, and I'll be with you for some 20 minutes to discuss something which is related to open banking, but not quite open banking. Obviously, we've had a lot of talks here this year as well as in the past on PSD2, and what we've seen is that PSD2 has become very much focused on the access to the account, which is obviously the biggest and most important part of PSD2, particularly for an audience of a open banking expo. However, towards the end of this year, we'll have something at least as important as the access to the account, and that's been called secure customer authentication or strong customer authentication, SCA. Now, for those who are less familiar with that particular concept, I will take some time to explain what it is all about. I will explain what the challenges are, what the fears of the industry are, and how to go about it to ensure a safe transition at the end of this year. Obviously, having any deadline for e-commerce in the end of a year around Christmas sales is obviously never going to be a popularity prize winner. It is a very busy time anyway for e-commerce merchants as a result of all the lockdowns around the globe, but excessively so and exceedingly so around Christmas. So what is going to happen? The regulator, the European Commission, helped by their sidekicks from the European Banking Authority, EBA, have come up with a way to make payments, particularly online payments, more secure than they currently are. As we know, over the past few years, or over the past decade, I would even say, remote payments, mostly done by cards, but also by alternative payment products, have not yet reached the immediate success rate or completion rate, successful completion rate that point of sale payments have. Point of sale payments will typically go okay in over 98% of cases, whereas for online payments, we still see that we're struggling to even reach the 80% successful rate. And on top of that, a lot of those transactions are also the cause of fraudulent transactions, fraud losses for consumers and banks alike. So in order to restore trust in online payments, to ensure that fraud is kept to a minimum, the European Commission has introduced the concept of SCA. Now, SCA means that for any payment that you make, online as well as offline, you should actually always have two factors to authenticate the owner and the transaction. And you can actually choose two factors, and you see this on the left part of the slide, two factors out of three that are possible. One is called possession, it's something you have. A second one, it's inherence, something you are, like maybe your fingerprint. And the third one is called something you know, typically a password or a PIN code. So for any transaction to be compliant with these new rules, two of these factors need to be applied. So it's either something you have, like a registered and verified phone, and something you are, like your fingerprint or your Face ID, or it is the combination of something you have, which is, for instance, a physical credit card, and something you know, which is the PIN code that's only known to you. Fairly simple and straightforward as a concept. The SCA is mandatory whenever a customer accesses their payment account online. So when you go to online banking or when you open your mobile app, when making an electronic payment, which includes also the so-called online payments or card not present, or when you do an action, a client action through a remote channel. Now, we will focus here on the orange part, which is what to do and how to go about it when you make an electronic payment in the new SCA world. So, first of all, before applying secure customer authentication, we must be aware that there's actually also a number of exemptions available that enable payments that do not require this SCA. I've named them on the slide that you see. Some of them are marked in gray, others in orange. The gray ones are relevant, but not relevant for online payments or card not present transactions. The orange ones that I mention here are relevant for online payments. So if we look and we have a closer look at all of these exemptions, we see that there are a number of interesting ones. So we see, of course, contactless transactions under a certain floor limit will be still considered to be okay without SCA. The same for unattended terminals for transport and parking fees. Credit transfers to your own account, so maybe from a savings account to your checking account. Payment account information retrieval also doesn't require SCA, and so-called secure corporate payments. Then we have 4 that are relevant. One is low-value transactions. So below a certain threshold and below a certain cumulative amount, you're allowed as an issuer, as a bank who gives the payment credentials to the customer, to let them go on without secure customer authentication. You're not obliged, you're allowed to do it. And as we understand in the industry, most of the banks are likely to apply that massively, if not completely. A second one is called low-risk transactions. So if you have a transaction risk analysis tool, and if your fraud levels are below a certain threshold, you are allowed to do a risk scoring on each of the transactions coming into your system as a bank, and then basically on a risk score, decide whether or not you want to apply the secure customer authentication. A third one is called trusted beneficiaries. Consumers could be enabled, if the bank enables them, to ensure that so-called whitelisted counterparties, maybe web shops you do a lot of commerce with regularly, can be exempted from SCA as well, as long as the consumer can also withdraw that. And then we have recurring transactions where you make monthly payments basically for a subscription, Netflix, Spotify, what have you. Those only need to have an application of secure customer authentication once at the outset, but not for the monthly recurring transactions on them. So this gives you an overview of how to possibly avoid the exemptions. But with the exception of low-value transactions and recurring transactions, which are going to be massively applied, transaction risk analysis and whitelisting are currently not very well and widely developed. It is quite complicated to implement, and as at the same time, many of the banks and the merchants needed to make sure that they at least had secure customer authentication in place for those transactions that do not fall under an exemption. Therefore, not a lot of work went into this. And I would say, as I'll come to later, that in the end, I would actually propose that any such investment would be postponed until after the 31st of December of this year. So, having said that, I think that we can show you something on how it's going to likely work. We see that, and these are data from early October from MasterCard and Visa, we see that particularly for cards, the implementation of the necessary protocols, I won't bother you with all of the details, are actually progressing fast. Doubling in a few months, but we're still not completely there. We still require a lot of work to be done and to be completed before the end of December. And therefore, I would call out on everybody who is not yet fully ready with this to really get going to make sure that these transactions can be processed under the SCA rules, because very bluntly said, if parties are not ready in the chain, transactions may and will be rejected as of the 1st of January, which is of course not something that we are happy to see. And this is also where you can see how merchants associations in particular have asked for more time. This is already an extended deadline, but again, more time, because with COVID, with the high amount of traffic on their websites, many of them have found that they've had very little time to actually prepare for this. The authorities, however, have stated that they will stick with the extended deadline, which is already 15 months after the original deadline, which means that everybody needs to be ready, because actually applying secure customer authentication for the bank of a cardholder is mandatory and not optional. So for all the transactions that do not fall under one of the exemptions that I discussed on the previous slide, they will have to be applied. So some work to do. Moving to the next slide. So how is this likely to be working? So there's a lot of different implementations available in order to comply with SCA. The way that we are doing it at ING, and what we would say is or should be best practice in the industry, is actually leveraging the fact that most, if not all, of our customers who are engaging in e-commerce also have a mobile app of the bank. So as we have authenticated the phone to be in the possession of our cardholder, and because we are able to redirect these customers to our mobile app, we can use the verification in the mobile app, a fingerprint, a PIN code, or a Face ID as the second factor on top of the possession. So how will that actually work? Let's look at this particular example. On the left-hand side, you see somebody at a checkout step from a web merchant. If you look at the mock-up of that particular page, you might even be able to guess which particular merchant this is, a rather well-known one, so that's why we took the example. And when checking out, actually, you will be redirected to the app of the bank that you are with, in this case, ING. So the mobile banking app will be opened, and there, just like the customers have done for all of their normal transactions, they will confirm the transactions using either the PIN code or the Face ID or the fingerprint that they have used and that they currently use and often use in this flow. After completing that, you are redirected back to the merchant, and you see that then there will be a confirmation that the payment has gone through successfully. And we've spoken to many e-commerce merchants who have voiced their concern that this kind of a redirection could actually lead to a lot of abandoned shopping trolleys where people are not familiar with the process and will therefore not complete the transaction as wished. What we know, however, is that this particular process of redirecting to a banking app is something we've had for many years in ING in the Netherlands. In a local payment product called Ideal. Ideal is an alternative non-card payment product which rides on the credit transfer rails and which does exactly what you see here on the screen as well. And what we know is that not only are therefore Dutch customers and Dutch consumers very familiar with this procedure, but from the moment of introducing this process, we see that consistently the successful completion rates of these transactions are higher than of any card brand that we also serve our customers with. So typically we have successful completion rates easily over 80%, whereas card-based ones, both the ones with 3D secure security already and the ones without, are struggling to even reach 80%. So we know that this process will actually be able to increase the successful conversion of transactions above what is currently there. And while some of the merchants are claiming that a Cardmageddon is likely to happen, that transactions will fail massively and e-commerce transactions will be lost as a result, we are quite convinced, and we know from the proof that we have in the market for over 5 years, that a redirect to a mobile banking app brings a sense of trust and security to the transaction, does not disrupt it, is very solid and robust, and will work. Of course, we're also aware that not all of the banks are exactly choosing for this kind of a methodology or method for SCA. We know, for instance, that some of them, at least initially, will stick with one-time passwords that are, for instance, sent by SMS to a trusted phone that then have to be retyped into a website of the merchant or on a website which is a pop-up that will be shown during the transaction. This kind of implementation clearly is not only less secure inherently through the sending of the SMS, but also creates a lot more friction and might possibly indeed lead to transactions being lost in the process. So what we know and what we see and what we have tested with our consumers in multiple countries is that a SCA method as presented here is robust, reliable, and trusted by the merchants and works excellently. In fact, don't take our word for it, but we have also tested with many of the largest e-commerce parties in the world in end-to-end tests to ensure that running this kind of a process does not conflict with how these web shops, either in apps or on browsers, are constructed. So we are very confident that this kind of process will actually bring both the security that the legislation is desiring, as well as the convenience, the trust, and the seamlessness that consumers expect. Of course, consumers in the Netherlands will have an even easier time adapting to this kind of a protocol, because if there are customers, they've already used this process quite a lot. I told you that we use this in Ideal in the Netherlands, which has a 60% market share for domestic e-commerce transactions. But we also know that the adoption period when we initially launched this was very short. It's very intuitive and everybody knows how this will work and will understand how it works. And of course, it leverages on already existing infrastructures and solutions that we have in place with our customers. So having said that, we still have less than 2 months before D-Day. And we would like to say that there are still a number of issues. We can't be denying that. We know that, of course, there is currently a lack of a harmonized approach across issuers of cards, in particular, and merchants, which also means that the experience is likely to differ when you use different cards alternately from different issuers. That is obviously not going to help the process. So I would say a process where a verified and secure app is used as the authentication method on the verified phone should be the way forward for all issuers. There's also, in some cases, inconsistency in the approach across local regulators and who are actually taking different stances on different regulatory aspects, which of course, particularly for merchants that are operating in different jurisdictions, can create some issues. We're talking to all of these local regulators as well as EBA as well, wherever we identify these and try to solve these going forward. We also know that from a technical readiness perspective, we're not at the 100% side on the merchant's side. I think there's very little time left, and unless you always qualify for one of the exemption, which currently seems very, very unlikely, your transactions are truly at risk. I can't emphasize it enough. If you haven't been, if you are not yet in a phase where you are live testing with either MasterCard, Visa, or even better with one of the individual banks end to end, you're really late to the game and you are at risk of losing transactions. But even if technically ready, a lot of the, even if technically ready, only 4.1% in September of the merchants have started to send EMV 3DS transaction types. So that's also still some work to do. So merchants get on it. I know that we are working on it from a bank perspective. If there are any merchants that are interested in live testing, we can also, within reasonable boundaries, accommodate that to help you go there. So certainly, then there is the EMV 3DS protocol, which for the card schemes is the way to comply with the SCA regulations. We also see there that unless you test thoroughly, there will not be the high successful completion rates that we're looking for. And basically, we know that the authentication messages from the merchants also should be improved in that sense. We know that it will be a very tight deadline. There will be interesting times early in January. My message would be, we are ready. We have tested it. If you are unsure, you want to test, reach out to us. Make sure that you're ready, because to be honest, we don't have and we don't get any leniency from our regulators to turn a blind eye on non-compliant transactions as of the regulatory deadline. So we can't make that any easier. We can't make an extension for that. What we can do is make sure that we offer our joint customers is as seamless as possible solution that they trust and that they can rely on, and that we deal with any concerns from your side on the interoperability of your website and our solution by testing up front. And if there are any issues, we will make sure that we're reachable for you to also ensure that we solve any unsolved issues. So with that, I would say it's a few more weeks. Let's get cracking. I hope that you're all ready. We are convinced that there is no reason to doubt the success of the solution that we are proposing. Should there still be substantial gaps afterward, let's discuss as soon as possible in January to what extent additional exemptions, like for instance whitelisting or TRA, can be used to close the remaining gap. But we are hoping that we'll actually have most of it covered and we'll have better completion rates than even before secure customer authentication. Thank you for your attention.
Eric, thank you very much for a really informative chat there. That was very interesting. Thank you very much. I note that you said you're very much, alive, you're ready, you're testing and everything else. But I was interested to really ask you how much the market is. But before then, just want to remind the audience, please, if you've got questions, please fire them through the platform. We'll try and get through as many of them as we can in the time and everything else. So fire through your questions and we'll happily try and pick them up. So, Eric, you talked about you being ready, but come off it. How ready is the market? We've got banks or the merch as well, the PSPs and everything else, as well as actually the merchants. So there's two different sides that need to be ready. How ready is the market as a whole for this, do you think?
It's not easy to answer that. Thank you for that question, David. I'm actually just out of a meeting this morning with MasterCard, with many issuers and acquirers in the room who gave us an update on what they see on their network. What they see is that issuers, by and large, appear to be ready, so that's good. The amount of real SCA transactions already taking place is rising since early October quite quickly. However, almost all of those transactions are actually migrated transactions from earlier versions of 3DS, so from earlier secure transactions into a higher level of security. The amount of non-3DS transactions, so non-secure transactions, is still pretty stable, which of course is worrying, as the advice from ourselves, but also from MasterCard and Visa, is to already allow for an amount, a certain percentage of the transactions to go live already with this protocol ahead of the deadline. So what this means is not very easy to assess. This could mean two things. One thing could be merchants are not ready and they're still working on it, or they are ready but they haven't switched it on, and they decide to switch it on after the Christmas rush. They don't want any disruption. As of now, tomorrow we have Thanksgiving, obviously, and then they will switch it on the 1st or the 2nd of January. So the second interpretation would be relatively good news if it weren't for the fact that we know that if you haven't properly tested live, you are likely to encounter some glitches or some teething errors at the start. We also see that most of the large acquirers seem to be quite ready. Some of the smaller ones, it's a bit more of a mixed picture, but I guess you can also see that we have personally tested with a number of very high profile, big top 10 merchants in Europe. They are ready. We've tested with them. We're very confident with them. We're less sure about the long tail, I would say.
Well, I was going to say there, it's quite interesting. So I was actually going to pick up on the fact that, is it just the big merchants that are ready and all the small ones are not? Because there's a long, long tail there to be got ready, as you rightly say. And I'm very conscious that we sit here on the 25th of November. Christmas Day is, 1 month away. You're not going to do it, you shut down a week beforehand as far as, actually IT and stuff. So you've got basically 2 or 3 weeks to do some testing, and then that's it till the new year, really. And you're not going to do anything first week of Jan, which is your sales time. So you're really talking from, another week or two, and then nothing's going to change until mid-end of January, really.
No, agreed. And I think that is indeed the issue. So there is a big hope that actually everybody is ready and we'll just switch it on and flick the switch on the 1st or the 2nd of January without a hiss.
We know that's not realistic.
Well, the merchants don't know if they're ready if they haven't tested properly in a live environment, obviously. There's a lot of testing support available from MasterCard and Visa that they should have known, but also the traffic there has been, let's say, it's been there, but it's not been overwhelming. And we also know that a lot of the PSPs have tested with their merchants and provided services, which is completely outside the view of MasterCard and Visa, what's happened there. So we've been given quite some reassurances by some major acquirers and PSPs that they have done such testing. But I would say that there is almost for sure going to be a number of merchants which will find a lot of rejected transactions somewhere in January.
But I mean, I know on the PSD2 Open Banking, it was due to go live in September 2019. It sort of got delayed till March 2020. Even now, there are huge numbers of organizations out there not delivering on the interfaces required and meeting the regulations required. And the regulators bluntly are not saying anything publicly. They've issued no fines. They've done nothing. If I was sitting as a merchant, I'd certainly be looking at that side of it and saying, well, hang on a minute. If on the PSD2 Open Banking side, no one's enforcing it, why should I believe they're suddenly going to start enforcing it on the SCA side? Because, nothing's been enforced out there at the moment. With COVID and everything else, the regulators seem to be concentrating on other things.
Yeah, so numerous questions have been posed to the EBA if considering the situation with COVID, a further extension wouldn't be on the books. They've been very clear that given the extra 15 months that were given, this is really the deadline. What we do see, however, is some, let's say, comforting noise from local regulators in some European countries. Allowing for a gradual phase-in of these transactions, starting off with only mandating SCA for amounts over sometimes even as much as 1,500 euros, and then gradually putting the screws on and lowering the thresholds for that. And that is, of course, unfortunate, as it will lead to potentially different applications of this hard deadline in different countries across the EU. And I'm aware that the European Banking Federation has also reached out to the regulators for clarity and also a level playing field for this, because we can't have any confusion on this. And then the next question, which you should be asking, you probably were going to be asking to me, is, so what if we actually see massive amount of transactions dropping off with dissatisfied consumers and merchants in January? Will the regulators then give some more room to still approve non-SCA transactions to banks? That's the question that everybody asks themselves. The banks, of course, the regulators, of course, don't want to create a precedent or have any pressure relieved from the merchant, so they are keeping their lips tightly sealed in that respect. But it seems clear that in many markets, if there is a real substantial problem, that regulators will have to step in, whether they like it or not. It's, to be honest, in our home market in the Netherlands, this is not likely to become an issue, as over 60% of our transactions, as I just mentioned in my previous talk, are anyway
yes.
on Ideal, which is SCA proof by design, I would say. And credit card online is a minority of the payments. And since everybody has access to Ideal anyway, that's not going to happen in the Netherlands for sure. In other countries which are predominantly or almost exclusively card-based for e-commerce, massive readiness issues can be an issue. But don't forget that also the transactions in any countries are quite skewed towards the top 10 of merchants, where the top 10 of merchants in almost every European country accounts for around 90% of the transactions. So even as long as the large merchants are ready, it will be a huge problem for those merchants that aren't ready, but it will not bring e-commerce to a standstill either.
Okay, and I think I have to ask you the question then. So, given what you're saying there, are you really saying that given the most of the big merchants are ready, in your view, in most markets, come January the 1st, come January the 5th, by volume of transactions, we're going to have 80-90% of transactions being compliant. Now, there may be a very, very long tail to that. So if you looked at it by the merchant numbers, it's far lower than that. But are you saying the majority of transactions, you believe, will actually be compliant?
Yes.
Okay. I have to ask maybe a simplest question here, because it's something you mentioned in your presentation about methods of SCA and the best ones and everything else. When you're coming to, again, back to open banking, the regulatory technical standards were neither technical nor a standard. They were just a broad framework. And we've seen the same with SCA in that obviously it's been left very open for the market to decide on what the best method is. Would this whole process and the whole situation and the consumer interaction be much better, do you feel, if there had been a single mandated solution saying, right, this is how you must do it, and therefore consumer education could have just been down a single channel?
Yes, so there's definitely a pro to such an approach. It would have all the advantages that you just mentioned. It would be very easy to explain to the customers how their SCA is going to work. There wouldn't be any questions on whether certain, I would say, less obvious ways of doing it would qualify or not. So it would create a lot of clarity and easiness. The reason, and they went on record with this, not to do this was to allow for innovation or for better solutions to come out of this. Because there will, of course, also be, beyond the short-term risk of disruption in January, there will, of course, also be a battle between the most convenient and seamless SCA methods, where I believe the banks that have that in order, where you don't have to retype an SMS OTP into a screen or something, will have the benefit and will gain transaction volumes against issuers that have, I would say, compliant but less customer-friendly processes in place there. So allowing for the innovation and knowing that what is best practice by the time the RTS were published, which is already many moons ago, would also stifle innovation to make it better in the future. So for a smooth transition, completely agreed. On the longer term, less convinced that this is the way forward. Although we also know from the access to account part of PSD2 that we are also suffering from after the fact opinions of EBA of what they consider to be a good customer interface, which which you can debate whether or not they're right about it, but which is opinions which come after the fact, which requires a lot of banks to then rebuild certain things which they could have built in the right way if only they'd had the information up front. Because, as you say, the technical standards are rather broadly defined, which leaves room for interpretation, but doesn't really help. And I think in access to account, it's probably even more damaging, as the PSPs, the TPPs, also need to accommodate many different ways of allowing for PIS or AIS with each of the banks. So we've tried in ING, for the lack of any proper standard, to at least make life for the TPPs easier by having one developer portal with one set of APIs that cover all of the EU countries that ING is active in. So at least we consolidate 30 million customers behind that to at least create some level of uniformity. But we do expect that also for access to account, the next wave will force some more detailed specs. But we've also seen, on the other hand, that with UK open banking, even when you define it, you haven't been able to define it in such a way that you can integrate with all the banks in a plug-and-play way. We have our own initiative in the UK and beyond that called YOLT, who were the first to have integrated all the CMA9 ones. And they said it was a different implementation with each of the bank, even when there was a standard. So apparently, even when you define a standard, you're not guaranteed a plug-and-play USB type of connection.
And I think that's a great place to end this conversation on. It's not plug and play. No single standard would have, it seems to be delivering it. And whilst we may have the majority of transactions, we may not have the majority of merchants on board by January 1 and doing compliant SCA transactions. That seems to be some key takeouts I'm getting for this conversation. So, Eric, it's been a real pleasure. Thank you very much for your time this afternoon. I know we've had some great audience interactions and those questions coming in. So hopefully I've covered them all. I really appreciate your time today. So thank you very much, sir. Have a nice day.
You're welcome. Thank you, David. Bye-bye.